Why market noise feels important and why it's not. You're watching the 1-minute chart. 3 news tabs are open. Your phone lights up with someone screaming about a massive breakout. And before you realize it, your plan is gone. Not because the market changed, but because you listened. If your trading gets worse the more information you consume, this video will explain why. And why the thing that feels most important is quietly costing you money. Every tick feels urgent. Every red candle looks like a crash. Every green candle feels like a missed opportunity. It feels like information. It feels like doing the work. It feels important. But if you've ever started a trading session calm and ended it mentally exhausted, confused, and second-guessing everything, nothing actually changed in the market. Something changed inside you. Most traders believe their problem is strategy, discipline, or timing. The truth is simpler and more uncomfortable. Almost everything you are reacting to is noise. And in trading, noise isn't harmless background static. It's a psychological trap, a slow, quiet pull away from your edge that happens long before you ever click buy or sell. Market noise feels powerful because it doesn't just inform you, it hijacks your attention. Your brain treats every alert, every headline, chart update, and opinion as something you can't afford to ignore. Not because it's useful, but because it's new. This has nothing to do with markets and everything to do with how you're wired. For thousands of years, ignoring noise meant danger. A sound in the bushes, a sudden movement, a change in pattern. Our brains evolved to survive uncertainty by seeking more information. When outcomes are unclear, the brain doesn't look for accuracy, it looks for relief. So when price starts moving and the outcome feels uncertain, your mind does what it's always done. It searches, it scans, it consumes. One more indicator, one more opinion, one more headline, one more chart on a lower time frame. Not because it helps, but because it feels like control. This is what psychologists call information bias, the belief that more data automatically leads to better decisions. In trading, this turns into the illusion of knowledge. You start believing that if you just understand why the market is moving, you'll know what it's going to do next. But the market is not a puzzle waiting to be solved. It's probabilistic, not predictable. And here's the dangerous part. Studies show that beyond a certain point, more information doesn't increase accuracy, it only increases confidence. Yet your brain still rewards you with dopamine just for consuming new information. That's why market noise feels productive, even when it's destroying your performance. Noise doesn't usually make you take reckless trades instantly. It does something far more subtle. It drains you. Every chart you check, every alert you read, every conflicting opinion you process quietly burns mental energy. Think of your focus like a fuel tank. You spend 30% watching a chart that has no setup, another 30% reading news that doesn't change structure, another chunk scrolling through opinions that contradict each other. By the time a real high-quality setup appears, the one that actually fits your rules, your mental decision-making battery is already low. So you hesitate, you second-guess, or worse, you force a trade just to feel decisive again. And when you're mentally tired, emotion takes over. Noise amplifies everything. A normal pullback feels like danger. A random volatility spike feels like opportunity. A harmless candle becomes a reason to exit early. A hype-filled move becomes a reason to chase late. At that point, you're no longer trading your plan. You're trading the emotional echoes of information that never mattered. This is why market noise is so destructive. It doesn't give you bad trades. It makes good trades feel unsafe. Your system worked before you listened. Your edge existed before the commentary. Your rules were enough until noise eroded your conviction. And here's something most traders don't want to hear. If market noise truly mattered as much as it feels like it does, consistent traders wouldn't exist. But they do. And what separates them isn't better information, it's better filters. Professional traders don't see more than you. They simply ignore more than you. They understand something critical. If information does not directly affect their predefined execution rules, it is noise, no matter how intelligent or urgent it sounds. Signal is not what feels exciting. Signal is what aligns with your plan. If you're a swing trader focused on 4-hour structure, movement on the 1-minute chart is not data, it's distraction. If a massive candle doesn't trigger your entry criteria, it's not opportunity, it's temptation. If breaking news drops and market structure holds, the news was noise. The market is a sea of random movement. Your job is not to react to every wave. Your job is to wait for the tide that fits your boat. Noise convinces you that being informed is the same as being prepared. It isn't. Preparation happens before the market opens. Noise attacks when you're already emotionally exposed, especially when you're in a trade. That's why it feels strongest near your stop. That's why it screams when price hesitates. That's why you seek it when uncertainty rises. Your brain wants certainty. Noise promises it. But certainty in trading is an illusion. The moment you start searching for reassurance, you've already stepped outside your edge. Market noise feels important because it gives you the illusion of control. It makes you feel active, engaged, ahead. But activity is not adapting, it's surrendering structure. The market doesn't reward activity, it rewards alignment between your rules, your execution, and your psychology. Noise breaks that alignment, and if you want consistency, you have to do something uncomfortable. You have to turn the volume down. Less input, less commentary, less urgency. More repetition, more structure, more trust in what you already tested. Your edge doesn't disappear because the market is noisy. It disappears because you keep turning the noise up. So here's your challenge. Look at your screen honestly. How much of it is noise? An indicator you don't need, a news feed that doesn't change your rules, an account that trades attention instead of consistency. Pick one source of noise and remove it this week. Because clarity doesn't come from knowing more, it comes from filtering better. And when the market gets quiet in your mind, execution gets cleaner, emotions settle, and performance finally becomes predictable. Market noise feels important, but importance is rarely loud. It's boring, repeatable, disciplined, and that's exactly why it works. Trade safe, stay disciplined.